Hi traders, this is Brad Gilbert with the FX Market Insight for Friday, the 11th of September. Right now, as we come into the Asian session, the North American outcome, equity markets down, which suggests a risk-off situation. But, the currencies just aren't dancing, right? We've had potential in the market for a bit of a dollar rally earlier in the week. And you look at the price action here, it's just inconclusive. And, we've got to sit back and wait. Bit of gyrations yesterday. The euro popped as Christine Lagarde, the ECB president, came out and basically said they're not going to, there's no exchange rate levels, which is, smart and the general line that all central bankers take. So what we've got is you just got to accept some weeks you get the setup early in the week, but we just don't get the follow through. And what I've done is I've just left the charts here, or haven't updated the trend lines. You can see the it's almost bastardized price action. Okay, dollar CAD continues to go higher, but it's still pretty big ranges. Dollar yen once again breaks down and starts trading sideways. Sterling's the only pair that has got really clear direction. So sterling and sterling crosses. If you've been on that this week, well then you've probably done all right. Outside of that, all we've been doing is the same process, like just updating the trend lines to the new highs and lows. And what you find is these things are just sitting in recent ranges, or they're back in the middle of a range, and there's not much more you can do about that. And this is just a process of trading. So update your trend lines is the smart thing to do. Get rid of the ones that don't make sense. And what you'll be left with is, the current levels where you can potentially enter if something happens. But we just need some sort of, some sort of idea of momentum or direction. Right. As I said, sterling's the one pair. It's gone a long way. I mean, it's down a couple hundred points. You've got to be thinking that that's got to come back at some stage. But, it's purely speculative at the moment. And as I just go through and update these charts, that's all we've got at the moment. So just concluding this update, let's get the Kiwi chart done. All right. So this is basically how my charts look now with the updated trend lines. We've got levels, but we just don't have the direction, right? The medium or the longer term direction. We've got a little bit of long-term direction. I'll just bring it across. I'm just updating the dollar index on the other screen. I'll bring that back for you as well. We just don't have that sort of continued direction in the market. So with that, it's tough going. So just hang in there. What we can do is, if I just bring you back to the daily market insight, the NFL's just about to kick off. Just looking at the markets here, right? So once again, there's no need to chase the markets when we don't have clear direction. Sterling is the best pair. It's got very clear direction. We don't have any support levels. So waiting for a rally back to 128.83, you could be waiting a while, right? So not much else to do. You come down and look at the data that's coming out today. Some UK data. US CPI has got to be on your watch list. But the one thing I've noticed, and it's got to be apparent to a lot of you traders out there at the moment, is every day all we're getting is, and this is why trading has been somewhat convoluted, is we're just getting the Dow, the equity markets, right? The US equities, which are giving us direction. They're up one day, down the next, right? There's no continued direction here across the board. And that's what's making trading a little bit haphazard. Okay, if I just come back over here, recalculate the correlation matrix, see if there's anything really tuning up as far as, the relationship with the equity markets, treasury markets, and the currencies. You see the NASDAQ. And actually, this is a pretty good point. The NASDAQ, right, this is the equity markets these days, right? So tech stocks are through the roof. Keep an eye on the NASDAQ more than probably the Dow Jones. And you're just trying to focus on potentially the pairs that are correlating extremely high with it. But if you have a look here, I mean, Kiwi yen is above 90, but the rest of these pairs are above 80%, as you'd expect with the yen crosses. So keep an eye on that. The NASDAQ's the flavor. Once again, it's up and down 2% each day. Something's got to give there. We want to continue, 2 or 3 days in a row of negative direction in the equities or positive. Then we're going to get a clean run on the dollar. That's when trading is going to become easy. Until then, you're just going to sit back and let the markets do their thing. And the best thing to do is when the direction is like it is right now, the best thing to do is just stay out and watch. unless you see something very clear. The North American session, by far and away, the easiest to work out what's going on. That's where we're getting those moves in the equity markets. All right, guys, that's it from me. Have a good week. Go the Chiefs.